As we keep an eye on your ag commodity trade, I want to turn our attention now to Brian Hoops. He's in Springfield, Missouri, and he's with Midwest Market Solutions, and he joins us to take a look at the grain market action here. Pretty big pop in the wheat market here today, Brian. What's going on with that?
Yeah, there sure is a lot of short covering going on in wheat futures. I wish I could say there was a real fundamental reason why we're having this rally. That would give it a lot more credibility, but it's all short covering at this point. We saw crop conditions in Kansas and Oklahoma improve a little bit. Texas declined slightly. There's really not a lot of big export news out there, but it's just a short covering rally. The funds have really pressed the short side in this wheat market. It's it's kind of similar to what we saw in the hog market in April contract, where we stretched that rubber band so tight that it finally snapped, and we have a big rally commencing here with just very little fundamental support.
Now, with the weather the way it is and the fact that we have the grazing deadline coming up on the wheat here on March 15th, what impact do you think that may have here on that new crop coming up?
The crop here is starting to come out of dormancy in the southern plains. Our trees are budding, there's flowers coming out of the ground, grass is starting to green up a little bit. So we're getting a lot of moisture and some warmer temperatures. It's really going to help this crop get off and running. And, for the most part, wheat's going to try and trade not only demand this month, but also start to shift towards trading that new crop wheat expectations. Acreage is already down. If we get a period where we have some adverse weather, we could see the short covering rally even turn even stronger. More short covering could develop because we are so extended to the downside with the fund selling.
What do you think of that point made this morning that wheat has become so low priced that it's competing with corn as a feed grain right now? In fact, some analysts have kind of pointed out that they're kind of holding each other up or pushing each other down.
Yeah, that's exactly right. The world supplies of wheat have mandated prices move lower, and Russian wheat prices continue to slip lower, and that's pulled our U.S. wheat prices down. I think that's also weighed on U.S. corn values because it can be added into the feed category and feed additives, and that's really struggled here. And so we're seeing a big rally in the wheat kind of spill over into the corn market. This wheat rally may not be able to extend even further unless world wheat prices also start to rebound and rally.
It's been a steep dive in the wheat market for quite some time. It has been primed for a bounce. Let's take a look at all the prices overall here. We'll start with the corn and soybeans. We'll get back to the wheat again. On the corn right now, we have that May contract 2 higher at 364. New crop December now 2 3/4 higher. We're at 389 1/4. And in the soybean market at the present time, we have that May contract in there now trading 3 1/4 higher at 893 1/4. The new crop November is currently trading higher by roughly about 3 cents. We're up 2 3/4 at 928 1/4. And if you look at that wheat market, we currently have the May Chicago wheat gaining today by 17 3/4 at 446 1/4, and Kansas City wheat is up as well. We have May now 15 1/4 higher at 435 1/2. It's only 2 ticks from our high of the day. We'll come back and we'll talk livestock with Brian Hoops right after this break. We're talking again with Brian Hoops of Midwest Market Solutions in Springfield, Missouri, and he joins us now as we take a look at our livestock trade. And as we talked about a higher grain market, the livestock going the other way, they are heading south today, Brian. Let's take a look at our current futures, and then I want to get your take on what's happening here. On the live cattle board right now, you currently have the April contract down $1.35. We're at 127.65, and this is after posting a high this morning of 129.40. We're getting in the neighborhood of a $2 turnaround there. June down $1.05 at 119.20. Now let's take a look at the feeder cattle trade. Remember how the feeders had been gaining on the live cattle here earlier this week? Well, today they're down as well. March down $1. We have April down 170 now at 144.28, and the May is down $1.25 at 146.15, and that one is about $1.55 off of its earlier high this morning. Lean hog trade this morning, it has seen a little bit of profit taking, perhaps. We'll find out from Brian in a moment. We have April up 7 at 62.92, and the May contract 20 lower at 70.83. The June down 48 cents now at 79.47. Let's find out from Brian what he thinks about this. What's driving the cattle market lower today, and is it taking the lean hogs with it, or what's that about?
The cattle market's seen a tremendous amount of technical selling. We tried to trade a little firmer early in the session, and when there were some traders just starting to get out of positions, get out of the way of the market. We started kind of a free fall, and that took out last week's lows, took out an uptrend line in April cattle. And so we've seen a tremendous amount of sell stops being triggered, really no cash movements out in the country yet. It's at a standstill. I would suspect that packers will use this weakness to try and buy some cattle by middle of this week, however. So usually when we get a big drop in the futures, that's an indication that packers will step into the market. And that snowstorm that's hitting the plains, it just doesn't look like it's going to hit any major cattle feeding regions and really not disrupt any issues with hog transportation. And that could allow that hog market to pull back off of its highs as well today.
Do you think that we are seeing some of that large commodity fund money coming out of the cattle market and being put into wheat, which has been so oversold for so long? Do you think they're just kind of moving the money around a little bit?
They could certainly be some reallocation of some index funds. You know, when they get out of one market, they rebalance their portfolios. You may see that taking place today. We're entering into a period of seasonal weakness for the cattle and for the hogs as well. Normally this time of year, we kind of top out and start to work lower over the next several weeks.
Well, I'm glad you mentioned the product prices. In fact, let's take a look at yesterday afternoon's update on the beef cutouts, pork cutouts, because we will get new numbers coming out in about a half an hour from right now. So yesterday afternoon on the beef cutout value on the wholesale side, we had the choice cuts up $1.23. They were added again at $227.36. Selects were up 85 cents at $219.63. It seems like a freight train that won't stop. And on the pork side, yesterday we had the carcass values up $1.38 and bellies up $2.44 all the way up to $120.90. My goodness, a couple weeks ago we were under $100. Thanks, Brian. I appreciate the time. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Very active market today, both directions.
We're going to get some new cutout information as well in just a little bit.
A little over half an hour.
Okay, thank you so much, Markets Editor Marlon Bowling.